How is it better to own than rent in today's market? We answer this question and many more on a regular basis at Klaus Team TV, so be sure to like this video and subscribe to stay up to date with local developments specific to the East Valley, local real estate, and more. Arizona rents are on the rise. Over the past 15 years, rents in Southeast Mesa have nearly doubled. But with media attention on a more recent spike in rents nationwide, rent increases in Phoenix Metro are outpacing the nationwide increase during the same time period, as reported by the Consumer Price Index.
Phoenix Metro and Las Vegas have been trading spots as the #1 metro area in the United States for the largest increase in rents, as both cities are seeing more renters. Our community has numerous multifamily projects in the works, but with more people choosing to rent, a continued rise in rents is expected.
Despite the spikes in rent costs, a recent study from Freddie Mac showed a record 82% of renters think that renting is more affordable than owning. For millennials and Gen Xers, there's increasing pressure from issues such as rising childcare costs and struggles with student loans, and these have a big impact. While the American dream to own a home still exists with most millennials, to many it has become a deferred dream due to student loans, lack of down payment, and delayed marriage. But despite this generational trend, savvy millennials are taking advantage of the benefits of home ownership, especially the opportunity to fix their housing costs.
While monthly rent prices in 85212 and 85209 are nearly doubled over the past 15 years, a homeowner who secured a fixed mortgage 15 years ago is most likely paying the same monthly mortgage as they did in 2004. Not only is the monthly payment the same, but a portion of each monthly payment is building equity in the home by paying down the original loan.
Because homeownership builds equity every month, homeowners are able to use their monthly housing costs as an investment, even if they're unable to invest in other opportunities. As a result, the average net worth of a homeowner is 34 times that of a renter. Homeownership is transformative. Research shows that homeowners not only have better health, but they also volunteer more, their children have higher reading and math performance, and children of homeowners are over 4 times more likely to stay in school. Homeowners also enjoy additional tax benefits for interest expense, and unlike other investments, can include some of the capital gains on home appreciation.
When you own your home, there's a possibility of a tax deduction for your mortgage interest and property tax. When you rent, there is no such possible tax deduction.
44% of Americans believe you need a down payment of 20% or more to buy a home, and a similar 44% of Americans who don't own say that the major stumbling block is the lack of down payment savings.
You know what amazes me is almost 80% of people still believe that you need 20% or more down payment when buying a house, when that's just not the case. Conventional programs allow you to put as little as 3% down, FHA at 3.5% down, and then of course there's the VA loan where you can buy a home as an existing veteran or active military member with zero money for a down payment. And there's also the down payment assistance programs, which can help in that same aspect as well.
In July 2019, HousingWire.com reported that the average down payment nationally is 5.3% of the purchase price, while Arizona averages much higher at 15.78% due to our lower prices versus other states. The down payment can make a big difference over the long haul. For loans of 80% or more of the value of the home, borrowers need to pay for a private mortgage insurance policy as part of their monthly mortgage payment. A borrower's payment will generally be what we call a PITI payment: principal, interest, taxes, and insurance, as the lender will pay the taxes and insurance on the borrower's behalf. With a down payment of 20%, there's no PMI, bringing the cost of the monthly mortgage payment down significantly. The larger the initial investment, the lower the payment is over the life of the loan.
Those making the transition from rent to buying are often surprised at how affordable it is. With the average 85209 rent of $1,600 a month, a home buyer with a 4% interest loan and 13.5 down could expect to be able to purchase a home at $270,000 and keep their monthly payment the same while enjoying all the benefits of homeownership. For those who want to investigate options, they can call the Klaus Team experts at 480-354-7344 or search local real estate real time at klausteam.com.